Luke and Jason here. We're talking about how we do it. This is how we do it.
This is how we do it.
Yes.
Yep.
So people want to know, how do we use our own research, right? We created a video to show you the overview, welcome you, all that stuff, but how do we use it, right? So Luke, why don't you kick us off? How do you use the MAPsignals research that we produce?
Well, so first off, I want to say that, I'm obsessed with stocks, right? So this is like what I do, right? So I don't expect other people to do this exact process.
Yeah,
but
you are a little obsessed.
A little obsessed. I enjoy it. I do, my career is what I love to do. But one thing that I look for is I like to look at our top 20 list. And I like to see stocks that are recurring. And so these are names that you can also point to a theme, right? So like if it's a 5G theme, or if it's some type of technology trend, something that I can get around, that I can believe that there's actually some growth ahead. And then the other kicker is, in addition to that, I like to listen and actually look over the earnings reports of these stocks, these companies, because every now and then there's going to be something really special out there. There'll be this stock that comes out, earnings were expected to be X, and it's 1.5X, and then
everybody is wrong.
Everybody was wrong. The stock's got to reprice, and then they have to go out further and they say, you know what? Instead of making 300 million next quarter, it's probably going to be 480. So the stock just gaps higher. That's usually a great recipe for success. A lot of the winners of tomorrow, they're in that case.
Reminds me of Green Mountain way back when. You remember that?
NVIDIA.
Yeah. So, that's a very good point. And to your point, those stocks that recur on the top 20, we have a really cool white paper that shows how using a strategy, using the most frequently recurring names on those 20, trounces the market. You should check it out if you have the time. Go to the white paper section.
They keep going up.
I think it's called the Outliers report.
Yeah.
They keep going up.
Yeah.
So how do I use it? I'm, a little bit more digging right into the numbers. I'm usually looking that same top 20 list. Think about what that does. We have 5,500 stocks. We whittle it down to 20 of the best buys. Like, it's already the creme de la creme, but how do we know which one to pick? Well, I'm looking for stocks with high fundamental scores and stocks with like 70 to 80 technicals. Why? When the technical score gets really high, say 95, 96, it can only go to 100, so eventually it might have to pull back. That doesn't mean the stock's gonna crash. It means it just might not be the best entry point, right? So I look for that. I look for more frequent occurrences too. That was in my notes here.
Yep.
And I want those solid fundamentals to reinforce a strong technical picture. So, that's how I pick my stocks. Or we overlap a lot in what we do. Obviously, we kind of share a brain. But I want you to use your brain now and tell us how you pick winning options trades.
Yeah, so the first thing that we like to do is, number one, everybody has their own trading philosophy. And especially we've been in the market for, I don't even know how many years, but it's definitely in the double digits. But what I try to look for is prior winners. Prior names that have been on these top 20 lists, they continue to show these buy signals, and then all of a sudden they have a bad earnings report, or they have
negative news.
A downgrade. There's some rumor. The rumors
Kramer
are always
mashes a button.
Could have been a button. Could have been a bear signal. Whatever. But oftentimes, whenever the pain gets hard enough, when the fire's hot enough, that's probably whenever you want to strike, and that might be an opportunity when a stock is down, it's on its knees, to sell some volatility, make a bullish bet, etc. That's how I go about finding.
And you weigh your risk reward, and you say, so let's say a stock has fallen, you say, hey, here's a great chance to maybe sell a put, right? What's the worst that happens? We're buying a stock at an even deeper discount than it already was. It's a great name, things like that. That's the way we think when it comes to options. Might feel scary at the time. Or flip side, there might be trends that can be taken advantage of when the options are mispriced and they're cheap. And calls are cheap relative to where we think the stock's gonna go.
And these are names we wanna own too. So it's not like we're like, oh, let's go sell a put, or let's do a risk reversal on some name that we don't care about. These are actually great companies.
These are top 20 names.
Sure.
Right? Let's talk a little bit about our big money index and why we use it, right? We're out there saying it's special, it's unique, it nails market lows and highs. Like, how do we use it? Like, you know, you'll call me up one day and you'll be like, Jay, big money index is slowing down. It's not rising anymore. Get ready, prepare yourself, right? So why don't you talk a little bit about that?
Well, the big money index it just measures buying versus selling. And the easiest way to think about it is when buying is coming into the market, that index is going to be moving higher. And it only is going to go up to a point. And then we get overheated, then we get overbought. And then there's not really much higher that it can go.
Buying like that can't last forever.
Right, and it leads the market. The other thing is when selling is bigger than buying, the index starts to go lower until, of course, it gets too low, and then we get oversold.
Oh, those are great points.
Those have been incredible times.
Scary.
To be buying stocks.
Right.
Scary, but also just
people talking about bear markets.
Q4 of 2018 was the recession fear, right?
Yeah.
But there was no recession. But if you would have bought during that oversold, what happened?
You'd be laughing.
You'd be laughing to the bank.
So the big money index is a great gauge to identify when markets are getting overheated, overbought, or oversold, these pivot points that can be great chances to take risk. That's how we use the big money. And we're gonna just wrap up this video with who is our research for, right? We've told you we sell it to hedge funds and people like yourself. So who uses it? The real answer is there are many different people who use it different ways. We do sell it to hedge funds, fundamental portfolio managers who want a different view. We sell it to quantitative hedge fund managers. We don't even know what they do with it. They take our data and put it in a black suit. And we sell it to people like you and me, people like you.
People that love stocks.
Enthusiasts who love stocks, who want to get information they can't get anywhere else from two Wall Street professionals who figured something out that's pretty cool.
With a great track record.
Great track record.
Yep.
And handsome faces. You know,
yeah, that too.
So,
the bonus.
It's a bonus. So, you know, that's a little overview how we use our research and who it's for. And yeah, I don't know much more that I have to add.
That's all that we need.
Thanks a lot.